This is the S&P 500 one-day reading for November 9th, 2022. It's currently October 7th, 2022, 12:28 a.m., and that's Eastern Time. So the overall theme and behavior for the day, we have the Ace of Swords, a critical resistance level, very likely on more than just a one-day chart, is highlighted, and we in most cases, when we see the Ace of Wands, there's quite a bit of volatility around that resistance level, and an opportunity to position oneself in both directions utilizing options. It's kind of usually a good mean point, usually a good like mean point for a straddle or a strangle in options. The behavior around the high, so it's nullified, but there's a strong decline off of the high, and it offers an opportunity to open up a long position. It's nullified, however, so like in other words, the decline is like reversed, and it looks like off of the low we have the beginning of a rally at the low, and we push higher out of the low. When we look at the 1 month, we're on the 9th here, right, and we have like pretty strong decline energies correlating from the overview from the 1 month here, and a low correlation. So I think probably would, and it looks like there's probably some pretty good price swinging here too. We have a pretty big move on the 7th into the 8th, and then looks like we probably gap up on the 9th. Yeah, we likely gap up on the 9th, and I'm advised to trade around the halting of a bullish trend marked by a sharp decline through a critical support level, and that's on a one-day chart. Behavior in the pre-market, we have a decline through multiple support levels to reach a low somewhere right around the open. Out of that low, there's a big move to the upside, a big rally to stand out on a one-day chart. Or not a rally per se, but a big move higher. It'll stand out on a one-day chart. It offers an opportunity to position oneself for a decline. In that first half hour, it looks like there's a trade opportunity at a resistance, a failed attempt to break through key resistance there in that first half hour, followed by a decline through key support. A U-shaped dip between roughly 10 and 11-ish, and it looks like probably there's a trough there in that U-shaped dip, and then we have another failed attempt. It looks like it'll look like we're breaking through that resistance that we failed to break through. It's going to look like we're breaking through it between like 11 and 12, and we may even break through it momentarily, but it's a fake out. I'm advised that there's a failure soon. There's 3 pokes through the same price level, roughly somewhere between that 11 to 1 o'clock hour period. And off of that third poke, there's a sharp decline to reach another low for the day between roughly 1 and 2. And out of that low, there's a breakout. We come to revisit resistance levels. There's more deception around multiple failed attempts to break through key resistance. Another low at the end of the day, strong low correlations at the end of the day, but there are bullish cards. So out of a low somewhere in the end of the day, we should see a rally that increases with momentum, creates a new support. At that new support, there's a cash out opportunity, and then there's a fast, sudden move higher, ending that sideways rotation that we do the new support at. We'll be rotating sideways, and then in the post-market, there's a fast, sudden move higher, marking the end of that period of rotation. There's a trade opportunity at the close as well. Definitely a tricky day. With that said, we should open lower the following day on the 10th. And that's the prediction. That's the November 9th, 2022 prediction of the S&P 500. Let me know what you think by hitting that like button. Don't forget to subscribe. Most importantly, my friends, follow that rule of karma. If you don't know what I'm talking about, please watch the video explaining the rule of karma. It's super important if you're going to follow the information on the site for your own good and for the channels as well. And thanks for watching, guys. I'll see you guys on the next one.